Hello and welcome to the first edition of Shareviews for 2017. I'm joined by my co-host Stefania Bell-Baglio, who is Director of Cassiopeia Services, and by Amanda van Dyke, who amongst other things is a fund manager and non-executive Director at Paternoster Resources. How are you today, Amanda?
Good, yourself?
Well, I'm feeling bright and breezy on the basis that gold has rebounded. Can it continue?
I think it very much can continue. I don't think we're going to have barring unforeseen catastrophe, I don't think we're going to have the 25% run-up we did in mid-2016, but I think gold will post positive gains. And realistically, gold's doing well in January. Gold almost always does well in January. It does very well in the first half of most years. The run-up to May is usually very good, and it's showing typical gains for January. And there's been some very positive global market things that are supporting the gold price. So I think all is well in the gold world.
Right, and that gold's bounced back. I suppose there's a bit of dollar weakness that we've had just to start January,
Absolutely.
so that helps gold. But otherwise, you've got things like I think there's with Trump coming through later in the month, a bit of fear there that he will be pressing the nuclear button. But I think China banning private asset purchases of gold, and obviously the banknote issues in India. Few decent fundamental kickers for gold.
Well, I suppose there are some good kickers, but mostly the numbers I've seen recently, Chinese New Year's coming up, and gold buying in China is up, typically for the time of year, but it is definitely on the rise since the end of last year. And the reality is, in most Asian economies, including India, when things get uncertain, when people don't know which way the economy is going to go, when people aren't quite sure what Trump's really going to do or not do, they buy gold. So I'm not complaining.
If we are looking at some gold stocks, which one would you suggest investors to follow in 2017?
There's a few that I hold in my fund that I'm very, very fond of. I think this could be a really great year for Hummingbird. Hummingbird is building a mine as we speak in Mali, and towards the end of the year, they should be pouring first gold. And they've got some of the lowest cash costs in the business. So I think it's when you have catalysts for change that gold companies do well, and Hummingbird is on that track. They're in construction and they're headed in the right direction. So I think we could have some really good news items, and we could have some great growth in Hummingbird this year. So I'm looking forward to that. Who else do I like? I like lots of companies. I think Centamin's had a great year. And will continue to, and they're increasing their dividend, from what I understand. Excellent stock to follow. I'm hoping that Petropavlovsk POG will get itself out of the gutter and start performing. They've finally refinanced all their debt, and they're set to increase their production based on that in the next few years.
Right.
Those would be good ones.
Petropavlovsk, it's been a long wait for that stock to lift off. I mean, it really has been quite painful to watch.
Yes, especially if you're a shareholder, which I am. So, no, it's been extremely painful. But the thing about these stocks are, will the stars align? Will all the right things happen? And they definitely needed a higher gold price. And with a higher gold price, are they in a position to actually start? Look, the fundamentals of gold are not actually that complicated. Can you produce this, take it out of the ground and sell it for more than you're taking it out of the ground for? That's basically what the best gold companies do. They make a margin. It's a business, and it's about profits. And unfortunately, in a low gold price environment, and with a huge amount of debt that Petropavlovsk had, they've had a really crappy few years. I'm hoping that they've actually got all their ducks in a row right now, and eventually they'll be given credit for that. And what might help them more than anything else, actually, I mean, those ducks in a row were important, getting their debt refinanced, financing the increase in production through their, it's a facility that processes refractory gold. So they've financed the completion of that facility. So that should get them a good at least 20% bump in production. And they've bought a new asset, so they have some growth. And all of those things are great. But fundamentally, they finally have all of them in control. And I'm thinking that with Trump coming in, Russia might be a place to invest again.
Well, they're all friends, aren't they? Taking it a little bit wider, though, if you're a small cap investor or a private investor in a small cap area, what are the three main things you should be looking for? Is it just about the commodity prices, or are there other issues or other things to look at?
Actually, if you're a small cap investor, I'd actually say don't look at the commodity price, because you can't control it, and you're not really in a position to know whether it's going to do how it's going to perform. What you want is stories where, what I always say is in the bottom quarter, you cannot go wrong in the bottom quarter of the cost curve. So if you're producing in the bottom half or the bottom quarter of the cost curve, no matter where the gold price is, you're going to make money. And it's the same thing for any commodity. You don't want to try to predict where the gold price is going. You want to predict the companies that are going to make money no matter what.
But isn't it also the case that you don't want to try and predict which companies are actually going to find something under the ground? Because that seems to be a major problem in the AIM market, that you have a mining stock which doesn't actually mine anything, or can't mine anything because it needs another $100 million in order to get it, and its market cap is $500,000.
I don't want to pretend that you can't make 5-10 beggars if you find an exploration company that finds gold. But the reality is exploration is extraordinarily risky. It's not mining. Exploration is not mining. Exploration is the definition of a punt. And sometimes punts pay off, but a lot of times they don't. And they'll come back to the market 15 times for money. And if you're not a geologist or a mining expert, your ability to know to just reduce the risk, because nobody knows. Even geologists don't know what they're going to find under the ground when they drill for it. But if you're not as sort of educated in that, it's very hard for the average person to know what someone's going to find on an exploration game.
And Amanda, if we move from gold to uranium, what's your view on the sector for this year?
I'm massively bullish on uranium. Uranium's at 25-year lows in prices at $18. It's moved up to 20 very recently, but I actually think you'll see a minimum of a 50% return. I think uranium's going back to $30 at least, potentially even 40. And once again, if you want to play uranium and you want to play it safe, go for the guys in the bottom quarter of the cost curve. If you can make money at $18 uranium, then you'll make a lot more money at $30 or $40 uranium. But at least you're making money at 18. One of my favorites, which I hold, is Berkeley Energy. I went to visit their site in Spain. It's a brilliant little mine. It's got in the bottom decile of costs, and it checks all the boxes. Good product, good management, good community relations, and it's going to go into, much like Hummingbird, it should go into production. Well, they're construction now, and I don't want to misquote. I'm not sure if they're actually going into production this year or next year, but sometime within the next year, 18 months, they'll be in production. And if the uranium price plays ball, they should do very, very well.
And if it doesn't, it doesn't matter.
And if it doesn't matter, because they will make money at these prices.
Amanda, you are also on the board of Paternoster Resources, which is an AIM-listed investing company in the natural resource sector. Would you like to tell a little bit more about your plans for 2017?
Sure. Paternoster is a bit of a... So in my day job, I invest in mining companies for a listed fund, which has a certain risk level associated with it. But Paternoster is an investment company, which is a slightly different mandate. And we invest in undervalued AIM shells, and we take larger positions, sort of 10, 25% positions, of companies that are in a little bit of trouble usually, that need something to get them, to turn them around. So we invest in turnaround stories where the combination of our cash and our help can get us very good returns. And so it's investing in resources, but in resource shells largely. It's about being a shellmeister. And that's what we try to do. And we get the kind of multiples I can't get in a listed company, where if I take something really little worth less than a million quid, and we put some good assets in it, we give them a little bit of cash to do what they need to do try to make sure they get the right people on the board to get them to the next level, and then be able to exit with, 2 or 3 times our money. That's the aim of that particular game. It's about, and the reality is, it's very much like resources. It's sometimes very hard for a retail investor to be able to get access to deals. They can't do the amount of homework necessary to figure out the average retail investor is not a geologist, and he doesn't have the time to do due diligence on every director on the board and every bit of the management and all of that kind of thing. So, and he doesn't necessarily have the ability to look at 30 or 40 or 100 companies so that he can have a diversified portfolio in the gold space or in the resources space. So that's why he would invest in a fund like my own and let us do the homework, because it's our job to do homework on these companies all day. If you want to play shells where you can get very good returns, we hope that by investing in Paternoster, you get access to the turnaround shell market in London. And that's what we're trying to turn Paternoster into, as an investment company that specializes in turning shells around.
Well, we'll see how that goes for 2017. Amanda van Dyke, thank you very much for joining us for this edition of Shareviews.
Thank you so much.